a lot of what people are talking about is 2024 loading contracts, and the whole curve in Brent Dubai is in backwardation. So it's suggesting that there's a bit of a return to normal expected next year. Whether that pans out or not is of course unknown, but at least what we are getting at is everyone can say what they want to say, but we're looking at the evidence of positioning. And I think that from a overall positioning point of view is what if the market could tell you something, it's telling you it's risk off and waiting, but it's also telling you that they're expecting kind of rebalancing of their light and heavy crude, which I think is very significant. And on the flip side, if you're very much against this view and you think that's impossible, I think that OPEC are going to continue to cut. I think I don't see the scenario. Then there's opportunity, right? There's the Brent Dubai backwardation to sell into. There's the light, gasoline and naphtha versus gas oil and fuel oil, for example. But I think when people hear these things, it's not about saying heavy is bearish and light is bullish. You can't just say that. It's more like, okay, what are the current prices that have priced in the movements of the year and everything that's been going on in physical pricing and positioning in general? And you start at that point, and it's about a relative thing, because everything's about relative to where you are. Not, you can't possibly sell if the market's bullish. Well, actually you can, because if the market's bullish and it's been priced in and everyone who can buy has bought, then actually it's a lot more likely that the market will move down. The risk reward skews, and that's how people have to think. You have to be dispassionate. You have to think about what has been priced in by market reactions and market positioning, not what you want to see the derivative market reflecting